All right, everybody. How we doing today? It is Sunday, October 21st, 2018. Welcome to my newest segment of Markets, a lovely look ahead. I mean that. I have been pondering what may happen here in these markets, being that we are so close right now to the midterms, and there's a lot going on geopolitically. And I really do believe that's going to weigh into how this market plays out this coming week. So, with that said, you and I, we're going to talk about a bunch of things. We're going to look at a whole bunch of charts, and we're going to try to make a little sense of it, and we'll see what we come up with. So, what I'm going to need you to do, in the description of this lovely video, is a link to my website, traderschoice.net. Click on that link, and I will meet you over there. And you can watch this video, and we'll cover this whole thing. If you are already on my website, well, let's get started. All right, so here we go. We're looking at my lovely website. Before we look at some charts here, let's try to put a few things into perspective, and let's look at where we are here in the cycle. Markets run in cycles. I believe most of you probably know that. If you were to look back historically on month after month after month in this market, you're going to see that they kind of run in a similar pattern because similar things happen. Well, right now we are staring down the midterm elections here. So with that in mind, logically, because we all understand this, and if you don't, you are really lost. The markets are fake. The news is fake. Things are not what they seem. So with that, again, coming out to the forefront here, let's put some logical things together. Midterms coming up. So what do you believe is going to be the most likely effort, at least effort, put into this market? Well, I have explained to you for a very long time that the stock market now, being that we have a managed market being taken over by the central banks who are sleeping with respective world leaders here in the United States as well. This is a global phenomenon. Let's stick here to the United States because this is where our midterms are coming up. Every effort imaginable, in my view, is going to be made this coming week, right up to the midterms, to make people feel good. What does that mean? The markets are going to be, at least attempt, in my opinion, they're going to make a lot of effort here to keep markets from not falling and more than likely going higher. I'm not saying this is going to work, but what we can expect is a lot of talk. I wouldn't be surprised to see some of this starting tomorrow. Markets open tomorrow. We're going to hear things floated out there. Like, for example, there may be a trade deal in the works with China. It will not be true. You're going to hear, geopolitical events in Saudi Arabia. Everything's kind of calming down over there too. A lot of effort is going to be put in to, distract people, pull people in directions where, they're not so overly focused on the stock market. They want people to, again, have a sense of, wow, everything is just great, no matter what the underlying thing actually may be. So with that in mind, we can expect to see, again, with regard to the markets, and I really believe this is true. We're going to see some stories put out on the media, mainstream financial channels that will more than likely not be true, be trade related, and geopolitically, things are going to kind of calm down a little bit. A lot of effort is going to be put into that. So, and this is where the big thing is, people, and you know what I'm going to say. And I'm going to look at some charts right now so we can put a perspective on this. Number one, I want you to scroll down here all the way to the bottom of this page. Now, this is the technical analysis for the S&P 500, SPX S&P 500. As you can see, right here, we still have a sell signal. Let's decipher this. Now keep in mind, this gauge has been right about 85% of the time. It's one tool and one tool only, but that's a pretty significant record. Now let's look deeper into this. Look where it says sell, and below that you got 10 sell signals, 9 neutral, 7 buy signals. Again, this is a weekly gauge. This is not a daily gauge. People write to me all the time, Greg, your gauge was wrong today. It's not a daily gauge. I mean, it even says week. Look at it. Okay. Anyway. Now, I have a little bit of a hard time going against this gauge here, but again, this is only looking at technical factors. And I'm not saying this gauge is going to be wrong. We'll see. But keep in mind, stuff is going to be put out this week right up until the elections to kind of ease the market. Again, fake stories are going to be put out there to try to make people think there's some kind of a deal in the works with China. There is no deal here. The Chinese are very steadfast right now with regard to this trade war. And if they have to, they will start yanking on the chain of the bond market, just like they did a few weeks ago. And, you know, remember how this played out. It's an incredible situation. This is just a few weeks ago. Vice President Mike Pence came out speaking out very strongly against China, trying to escalate how we were going to hit them with more tariffs. And then all of a sudden, a couple of days later, the bond market went absolutely wild. This was China dumping debt onto the market, shorting it at the same time. Then right at that point, almost a complete radio silence about throwing more tariffs on China. And this whole thing with Saudi Arabia, again, the petrodollar, Saudi Arabia can do what they want. And whatever story has to be floated out there and then backed up by whoever's going to back it up around the world, especially here in the United States, to keep that petrodollar, that'll be the accepted thing. It'll be brushed under the rug. Believe me, this is the way it's going to go. Again, understand how things work, how the financial system is rigged. If you understand this, you have a very clear understanding of how these markets are going to go. Now let's look at a few more things here. So I spoke about the bond market. I talk about it all the time. Let's look right over here to this bond market chart. What do you see? It's kind of bottoming. You see that here? What I expect is going to happen is, again, a lot of effort made to keep that bond market from selling off. So there's going to be, there more than likely will be a big effort to keep that from happening. So this bottoming that you're seeing here will probably lead to some buying, keeping that 10-year yield suppressed. The dollar is always especially right now, but we understand where things are more than likely going to go, the fly in the ointment here. And that's why I believe we're going to see a very large effort be made to keep bonds suppressed. Because even if the dollar strengthens here, now let's look down here at the U.S. dollar bullish ETF. You see that it's been kind of in a screaming uptrend here. Then we had a little bit of a sell-off. The market does not want to see a strong dollar. The administration does not want to see a strong dollar. This has been covered repeatedly. President Trump himself has explained that he wants the dollar weak. Now, he's saying this for a reason. World central banks, again, in bed with their world leaders, are doing the same thing. They're all trying to devalue their currency. There's no doubt about it. I mean, Jim Rickards has explained this. It's a race to the bottom. China, despite the fact that they're not being labeled a currency manipulator, is beyond any doubt rigging their currency. They just dropped it again to, I think, an 18-month low just a couple of days ago. And before that, back in April, they did the same thing. So in order to compete with that, the dollar has to be also pushed lower. You understand? These raise inflation prospects. and it takes away your purchasing power. It's always a cause and effect. So keep your eye on that dollar. But I think more importantly here, for the next, right up until we get up into the midterms here, it's going to be about the bond market. Keeping the bond market in that sweet spot. You're not going to hear. I would be so shocked if anyone of you out here hears any big rhetoric come out of the mouth of the administration regarding punishing China or hitting them with more tariffs. I want to see it. I want to actually see a link, not something from the past, right now up until the elections, because again, there's going to be a lot of effort made not to rattle anything. They want to keep the markets calm. Now, with that said, let's look dead center here at my trading chart that I have set up for you. Number one, I want you to click on this chart, just click on it anywhere, and then scroll up. This will magnify the chart, kind of bring out what's going on. Now, if you notice, sell off kind of came up here. We got a red candlestick there. Admittedly, there is a bearish sign in this chart. Now, if you notice these three bands here, these are channels. We are still below slightly or on that lower channel with regard to the price action. That's bearish. But again, if they start getting in here and propping up that freaking bond market, stocks will go up. You understand? It's very, very simple. And I believe that even if stocks don't sell off or gain, they're really going to try to make an effort to keep it where it is or put on a gain. Because again, they want people to feel good. They want people to get out there and vote because everything is just so great. You understand? No matter what the truth is, this is the story. And again, expect to see fake stories floated out about trade, about, there's going to be there's easing trade tensions. This is all stock market positive. And then the truth will come out later, just like it did recently. Remember that whole thing I covered for you? There was a fake story floated out about how there was some kind of trade deal talk, and then China came out a couple of days later. No, there is not. I explained to you at the time that story was fake. We know what they're going to do before they do it. It's an incredible thing. It really, really is. Anyway, let's look at a couple of more things here. Where it says SPX here on my trading chart, put in GLD, enter. We always do this. This is the paper derivative of gold. Now look at this chart here. Remember those channels I was telling you about? Look how the price action on this chart is above that channel, okay? That's very bullish. I've explained to you for weeks. See this bottoming, which we're kind of seeing in that bond market chart over here before it made a move up? Same kind of thing here. We kind of made a move higher. We're above that channel with regard to the price action. That's bullish. That is bullish. What else makes this bullish here? If they manage to push the dollar lower. And I think a lot of effort is going to be made to do that as well. Let's put in SLV. SLV, enter. Okay, now let's look at this SLV chart. You see those channels? You see where the price action is? We're kind of above that middle channel. That's also a bullish sign too. Not as bullish as being above it. Let's look at this chart here as an example of how you can utilize these channels. Just go back. Look at the price action of SLV, how it was below that lower channel for a long time and it moved down, 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 down. See how you can use this stuff? I hope you guys and girls are utilizing these tools. I set this all up for you, and I think it's doing a really good job here. And even this gauge down here, like I said, about 85% of the time it's been correct, and it's just one tool. You got to put all of this together. You got to think about geopolitical events. You got to try to stay ahead of what's going on, because we know what they're going to do before they do it. It's the truth here. This is why, sincerely, I have been able to call the Federal Reserve's moves so accurately since the get-go. Since the Federal Reserve has started talking about when they were going to, raise rates in all of these years since 2008. This guy here, I've been wrong once. One time. Nobody on Wall Street or Main Street has a better record of calling the Federal Reserve than me. That's the truth. I have not seen one guy or girl. If you have, please bring them to my attention because I want to talk to this person. But it's just so simple. We know what they're going to do. It's just, that's it. All right. With that said, everyone, let's keep this in mind. Let's watch where these markets go. Watch the freaking bond market. Don't sit there fixated on the stock market. All right? It's all about the bond market. Everything prices off of what's happening in the debt market, period. You know that if you've been following my work for X amount of years, because I talk about it all the time. But people get so fixated on the wrong things. Well, that's it. So let's reconvene in the morning. It's going to be all kinds of loveliness, and I'm looking forward to seeing you there. Bye.